Recently, the New York Fed announced that we have about 1.14 trillion in credit card debt, which is a new record. What does that mean for Americans?
What that means is that the debt, the overall credit card debt, is escalating simply because people can't afford to live off just their salaries, and they're using credit cards as a form of supplemental income to pay for stuff that they can't afford. Challenging part is that I don't see that stopping anytime soon.
Do you think that's why we're seeing such a surge in credit card balances?
I think, truthfully, the surge is due to the inflation that we've experienced, and that was self-inflicted. The overall cost of everything has gone up, maybe by 50%. I mean, have you gone out to dinner lately? The same restaurant that you used to go to and you would have a $50 meal is now $70. And that is an incredible challenge for a lot of people and a lot of families.
Right.
And by the way, even if inflation disappeared tomorrow, that restaurant is not going to reduce their pricing. They already took the hit of people being mad at them, their customers, oh, I'm not coming here again. They already took the hit. That ship has sailed.
Right.
A lot of businesses are starting to go out of business. A lot of restaurants certainly are going out of business. Huge chains can't afford to stay open anymore.
Right. So there's been a phenomenon recently called revenge spending, where not even just the younger generation, a lot of people, a lot of Americans are spending more on travel, dining, like you said, all of these like entertainment and things. What do you think would be the best way to get revenge on revenge spending?
Stop buying stupid stuff that you can't afford. That's the best way to get get your revenge. Listen, people were cooped up in their houses.
Right.
They were told they can't go anywhere. They were told they can't go to restaurants. They can't go on vacation. And now they're making up for lost time. And they're like, I deserve it. I need to go on vacation. The fact of the matter is, the one thing they're not looking at is how much it costs.
Right.
And that same plane ticket before the pandemic, which cost $200, is now $400 to $500 each way. I mean, it is astronomical how much
it's crazy
travel is costing. And then the hotels, hey man, this is good time. So it's a good time to be a hotel owner because they could charge a lot of money.
They're banking on wanting.
They're banking it, but unfortunately it's going on the people's credit cards, which is scary.
On the subject of credit card debt, delinquencies are also on the rise too. Can you tell me a little bit about like the biggest factor that you think is contributing to credit card delinquencies?
Inflation. The problem is Americans are getting choked by the debt that they're carrying. And if you think about this, you have a mortgage, so you're going to pay for your roof over your head. You have a car payment. You're going to pay for your car so you can get to work to make money. Food, those are the three things that people are going to try not to default on.
Do you think inflation is also inflating people's minimum payments as well? They're rising.
Well, the interest rates are inflating people's minimum payments. So that is increasing. But the interest rates are always high.
Right.
Even when the government was so nice to, or the Fed was so nice to lower the bank lending rate and lower the amount that the banks borrowed at, they didn't pass those savings on to the United States consumer.
Right.
They kept that. So if your interest rate was at 22% on your credit card, I'll bet you didn't see a drop. And if you did, it was a very minor drop.
So what advice would you give to somebody to avoid falling into this trap? Credit card debt, delinquencies. Give me your best advice.
I mean, listen, when people ask me that question, I'm pretty old school. A, if you can't afford it, don't buy it. So don't whip out that credit card. And if you do whip out that credit card, when that bill comes in, make sure you pay it off.
Right.
Do not pay minimum payments. Pay triple your minimum payments. Minimum payments is a fool's game. It's meant to keep you in debt, and you're not going to get anywhere. Minimum payments, typically 75% of minimum payments, Sydney, goes towards interest. And you know what? 25% goes towards principal. If you're lucky, you're going to be in debt a long, long time playing the minimum payment game. So don't do that. Don't get trapped. It's not to your benefit. The bank is not your friend. They want to get you in debt and keep you in debt because that's how they make their money.
Well, thank you for that advice. I feel like I'm talking to my mom or my dad.
Hopefully not your mom.
Well,